The stock markets tend to look at the impact of budget, and stock analysts try to find out the winners and the losers of various sectors. This is where I try to find what sectors got some benefits and what sectors have indeed got affected. So, this is where I would like to present my findings on the part of the winners and losers from Budget 2023. Finance Minister announced in her own words a budget which is growth focused budget for financial year 23, while ascertaining that she will be functioning highly in a disciplined manner to stay on fiscal consolidation path. The capex investment outlay that has been increased by 33% to 10 lakh crores for the next fiscal is the key derivative for the markets. I mean to say capital markets. So a 10 lakh crore allocation in terms of capex for capital expenditure is about 3.3% of GDP for 2023-24. Of course, there were some tax reliefs given under the new regime without any changes under the old regime, and there was an increase in the outlay for the housing for all schemes. Keeping all the announcements in mind, how those announcements drive down themselves in terms of their impact on various sectors is what I'm going to cover with brief explanation. So let's look at the first key announcement and the winners that are going to be. First key announcement relates to capital allocation increased by 33% to rupees 10 lakh crore or 3.3% of GDP. And the impact of this announcement is positive for engineering firms and construction firms. I mean to say, not real estate firms, mind you, engineering firms and contract construction firms in road, water, urban development and cement sectors. So these are the sectors, they are going to be the gainers besides iron and steel too. Second important announcement I feel is relating to capital outlay of rupees 2.40 lakh crores for railways in 2023-24. Here again, the impact of this announcement is going to be purely on railways and the railway ancillaries. Okay. Let's see the third important announcement which I feel is relating to 100 critical transport infra projects for steel, ports, fertilizer, coal, food grain sectors. They have been identified for an investment of 75,000 crore, including 15,000 crore from private services. So, impact, it can be seen directly from the announcement itself in terms of the sectors like the steel, ports, fertilizer, coal, food grains, and the announcement is positive majorly for the infrastructure and steel companies too. The next announcement relates to outlay of 10,000 crore rupees per year set for urban infra development fund to be established to make up for priority sector lending shortfall. Again, the impact of this announcement is going to be positive for infrastructure, metals, and cement companies. Further, we have an announcement relating to 100 labs for developing applications for 5G services to be set up. Again, the impact of this announcement is going to be positive for telecom and optic fiber segments. Another key announcement, investment of 10,000 crore rupees to set up compressed natural gas plants. CBG would mandate this, of course, in due course, and this announcement and its impact is positive for bioenergy companies. Further announcement relating to approval of 13 gigawatts of Ladakh renewable projects involving a capex of rupees 20,700 crores. The impact is positive for transmission of high voltage direct current players largely, mainly EPC companies, transformer companies, and other ancillary sectors benefit due to this project. Another announcement relating to PMA outlay increased by 66% to 79,000 crores. The impact is positive for affordable housing companies. This proposed expenditure on PMA outlay will help again cement, steel, engineering companies and also provide employment for indirect labor. Another key announcement relates to farm credit year limit for the year 23-24 raised to 20 lakh crore. Also plans to build more storage and boosting productivity via dedicated funds. The impact is again positive for agrochemical segment and seed segment of agriculture industry. Another announcement relating to providing of 35,000 crore for priority capital investment towards energy transition and net zero objectives and energy security. This announcement and its impact is again positive for companies focusing on renewable energy. Additionally, the government has reduced customs duty on basic acid base fluorspar from 5% to 2.5%. This impact is also positive for fluorine chemistry chemical players. PM Pranam scheme, which intends to promote the balanced use of fertilizers, reducing subsidy bill. Of course, this will encourage use of organic farming and micro fertilizers. Also, 1 crore farmers will be facilitated to adopt natural farming over the next 3 years. Though the impact looks to be positive for the fertilizers companies from the context that the subsidies are going to be reduced, but the thrust, if it is given on the organic farming without proper prior preparation, if India tends to shift towards organic farming, maybe we may tend to face the same kind of productivity situation in agriculture that Sri Lanka has faced when it tried to switch completely from fertilizers to organic farming. This is where I feel a balanced approach is required. So this announcement, though sounds positive for the fertilizer companies, but may not be positive when we look at the shift at which the farmers may be induced to shift to organic farming if it creates ripples in terms of the agricultural yields. So, a sudden shift from reducing fertilizers to organic farming may not augur well for the overall economy of the country, and the Indian farmers shouldn't be made to face the kind of situation that the Sri Lanka farmers have faced and the Sri Lankan nation has faced. Hence, I feel this announcement, though commercially looks good for the fertilizer companies, but this announcement, I feel, is not good for the economy as a whole. Another key announcement relates to enhancement of indigenous production for lab grown diamonds and reduce import dependency, financial support to be provided to IITs for research. This announcement in terms of impact is positive for gems and jewelry sector. Further, an announcement relating to reduction customs duty on shrimp feed from 15% to 5% to promote exports is also positive for shrimp manufacturing companies. However, here again, in terms of encouraging shrimp manufacturing companies to export more by providing these incentives, one should also keep in mind that many of the farmers today, in the greed for making good money through shrimp exports, have converting their green agricultural lands into shrimp farms and spoiling the ecosystem. So, a balanced approach and a focused shrimp zones have to be demarcated between the green zones and shrimp zones so that the green farming places will not get affected due to these shrimp farming activities in the greed for export earnings. And basic import duty on compounded rubber increased to 25% from 10%. This is positive again for rubber companies. Additionally, reduction on customs duty on open cells used in production of televisions to 2.5% from 5%, and reduction in customs duty on import of certain inputs for mobile phone manufacturing, again impact wise positive for television and mobile manufacturing companies under Make in India program in India. Another important announcement relating to 4 multi-modal logistic parks through public-private partnership. Of course, this is also a positive impact-oriented announcement for logistic companies. Likewise, custom duty exemption extended on import of equipment to manufacture of lithium ion cell for electric vehicles till 2024. Impact wise, this is positive for lithium ion battery makers. Another positive announcement is in terms of opportunity to sugar cooperatives to claim payments made to the sugarcane farmers for the period prior to assessment year 2016-17 as expenditure. This will provide a relief of almost rupees 10,000 crores. The impact again is considered to be positive for sugar companies. So far, so we spoke about the gainers and the winners based on the announcements that were made in the budget. Now, let's look at the likely losers. Of course, in this budget, there are many winners according to the announcements made by the finance minister. Losers wise, I feel the NCCD on cigarettes increased by 16%, and impact wise, the cigarette manufacturing companies are going to get impacted. So, barring this, I feel there were major positive announcements. Of course, these are all so far announcements in a budget statement, but budget has to be actually implemented to find out whether these announcements turned out to be a reality in the 1 year period starting from April 2023 to 31st March 2024. If they convert and work out to be realistic, yes, the budget works really wonders. If not, if it remains as mere statements for the reasons that we have a deficit budget, that too a fiscal high deficit budget which is dependent on huge borrowings, and in case such borrowings for any reasons gets delayed or the announcements in terms of implementation gets delayed, then the expectations will also get derailed. So, without being so pessimistic, let's wait and see how the year is turning out to be for India in 2023-24. Thanks for your patient listening.